Alright, good day traders. Today's free update from Seasonal Swing Trader brings us back to UPS. This was a stock that we analyzed in recent memory, and it ended up being a nice profitable short trade. We now find ourselves looking at another trade on UPS focused on the short side. You see that over the last 10 years, this trade has been profitable out of the last 10 years, or a win rate of 80%, with an average holding time of around 15 to 20 days. Despite the losing years here in 2011 and 2019, we had overall consistency there from 2012 through 2018, with another win there in 2020. So let's take a look at the charts and see what the charts are telling us. We have a monthly over here in the top left, weekly over here on the top right, and the daily down here on the bottom. So this is utilizing multi-time frame analysis so we could see the bigger picture. Now we have, since coming off these all-time highs here in October, you see the market has been struggling at this 175, 180 level. And where we are in the month here at the end of March, you can see it looks like we are on pace to close on a lower basis. This is further evidence over here on the weekly chart. We've got a broader based head and shoulders top going on with significant support here at the 155 area, and that's also evidence down here on the daily. So we've got a large narrow sideways channel, which is one of my favorite patterns. They do not appear very often, but when they do, they can lead to explosive moves. Now there's a couple of logical scenarios that can happen. Obviously, once we break, we can either go up or we can go down, or we could continue to trade sideways. I suspect, though, once we do break out of this range here between 175 and 155, about a $20 move, we're likely going to fulfill that measured move or measured target of this pattern. Aside from the NSC pattern or the narrow sideways channel pattern, we also have the head and shoulders top that was mentioned. And a student of technical analysis for any length of time, you know that this is a very reliable pattern showing profitability of 75 to 80% of the time. We have a left shoulder, a head, and a right shoulder, and then our neckline. So that move here would take us from the top of the head down to the neck, measure down, which should take us right down to around the 135 area, which it does right here at 130, 135. If we look at that over here on the daily chart, because of the length of this channel, it's going to be the exact same move here. Broader base, head, shoulders, top, narrow sideways channel. That would take us down, should take us down here to the 130 area. Notice too that we have this gap right here that we have not filled. That could technically take us down another $10 to $15 or so to fill that gap, because as we know, gaps are filled more often than not. So we are very comfortable taking a trade to the short side if we get a break and close below the neckline here around 155, risking above the last swing high, looking for at a minimum a $20 move. Why are we comfortable? Well, we're trading with high probability season analysis. We have high probability technical patterns, and we'll be looking to come down and fill this gap. So that's why we favor trading in line with seasonality and combining high probability technical analysis to give us as many confluences as possible, pull the trigger on the trade. Hope it helps, and we'll see you on the next update.